let's jump right into this explainer and absolutely demystify how wealth is actually built. Today, we're getting inside the mind of the legendary Charlie Munger to examine his incredibly patient, completely anti-hype investment strategy. You know, most investors totally overcomplicate the stock market. They're constantly hunting for the next big thing, the quick flip. But Munger? He didn't play that game. He didn't chase hype, he didn't panic when the market crashed, and he definitely didn't day trade. Instead, he anchored his money in a specific set of what we can call forever stocks. These were real, unshakable companies that he trusted to survive recessions, market crashes, and even wars. He passed away with a net worth hovering around $3 billion. So today, we're going to break down exactly what those companies are, and more importantly, what we can learn from them. Munger had this brilliant, famous saying, "The big money is not in buying or selling, it's in waiting." Think about that. While the crowd is out there overcomplicating everything, tweaking portfolios daily, chasing trends, freaking out over the morning news, Munger quietly built his billions by mastering this almost Zen-like patience. His wealth didn't come from discovering some secret trading algorithm. It came because he truly understood the immense, undeniable power of just waiting. It's a massive mindset shift, going from constant, frantic action to careful, quiet observation. And to actually execute that philosophy, he relied on a brutally simple three-step formula. Step 1, buy great companies. Step 2, hold them for a very, very long time. And step 3, let compounding do all the heavy lifting. I mean, it sounds almost too easy, right? But this exact sequence is literally what allowed him to survive major economic disasters. He'd find businesses with these massive competitive moats that made them nearly impossible to replace, and then he just stepped back and let time do the work. Let's move into Section 1, Crisis Comebacks. Banking on the rebound.
Picture the 2008 financial crisis for a second. Absolute panic, right? Banks are collapsing left and right. And when Wells Fargo plummeted to around $8 a share and literally everyone else was running for the exits, Munger bought. This is the perfect example of his ability to see straight past short-term terror and focus on long-term fundamentals. Where others saw a dying business, he saw a dominant institution that was just temporarily bruised by panic. And history proved him right. The bank made a massive long-term recovery, grew their dividends tremendously, and benefited from regulatory relief that unlocked even more growth. He bought the fear, completely ignored the headlines, and trusted the core business.
And he applied that exact same logic to Bank of America. He didn't just see them as a big vault to store cash, he viewed them as a massive money multiplier. We're talking about a colossal consumer and corporate banking system with an extremely low payout ratio, which, by the way, screams potential for future dividend growth. Plus, they generate strong earnings that are directly tied to interest rates. Munger knew that a well-managed bank with these specific traits isn't just a safe place to hide, it's a compounding machine.
All right, Section 2, Everyday Essentials, the cash printing machines. Stepping away from banking and looking right inside your own home, Munger absolutely loved boring, everyday businesses that just print cash forever. Just think about the heavyweights dominating our daily lives. You've got Procter & Gamble, making stuff people simply don't negotiate on, like diapers and toilet paper, which has led to 69 consecutive years of dividend increases. Then there's Johnson & Johnson, an absolute fortress in healthcare, with a super rare AAA credit rating and over 60 years of dividend growth because, well, people always need medicine. And of course, Chevron, providing the energy the world still runs on, with 38 years of dividend increases despite decades of people claiming oil is dead. Bull market or bear market, these companies boast unbroken dividend growth because the demand for what they make never stops.
Which brings us to his absolute crown jewel, Coca-Cola. Berkshire Hathaway bought in decades ago and literally never sold a single share. Munger himself drank Diet Coke religiously because he fundamentally understood that Coca-Cola isn't just a beverage. It is a global cash-printing ecosystem dominating over 200 countries. It pumps out hundreds of millions in yearly dividends and has grown that dividend for more than 60 years. It is permanent demand bottled up.
Moving to Section 3, Moats and Misunderstandings, Betting on the Future.
Let's look at how Munger spotted permanent demand in places the broader market totally misunderstood. Take BYD, for instance. It's a highly controversial pick, and yes, the stock has taken hits recently due to short-term fears, but Munger called this Chinese EV giant his best investment ever. Why? Because he looked past the immediate noise and zeroed in on long-term fundamentals. BYD is a world-leading electric vehicle maker that crucially owns its own battery and supply chain tech. Munger bet big on that massive long-term revenue potential, understanding better than anyone that short-term controversy does not equal long-term failure. Now, I want you to think about this massive number, 90% plus. This staggering metric belongs to Costco, a company Charlie Munger believed in so deeply he sat on their board for 26 years. That number is Costco's membership renewal rate. More than 9 out of 10 people who pay for the right to shop at Costco renew it every single year.
That ridiculous loyalty is exactly why Munger famously called Costco a perfect business. He caught on way before the rest of the market that Costco isn't really a standard retail store. It's a subscription-style loyalty machine that's just disguised as a grocery store. Because millions are paying a fee just for the privilege of walking through the doors, it generates highly predictable, massive compounding returns. It completely flips traditional retail on its head.
Section 4. The hidden pattern. 3 traits of forever stocks.
So, from banking to baby diapers to bulk groceries, what do all 8 of these wildly different companies actually have in common? If you strip away the hype and ignore the daily charts, every single one shares 3 core traits. Number 1, strong moats. These businesses are incredibly hard, if not totally impossible, to replace. Number 2, predictable demand. Boom or bust, people need what they sell. And number 3, time advantage. These are companies that reward extreme patience, not frantic day trading. The real lesson here isn't about guessing the hottest sector, it's about hunting down these 3 specific traits and letting time do the heavy lifting.
Finally, Section 5. Application. Start building your fortune. Okay, so studying a billionaire's portfolio is fascinating, but how does this actually apply to your wallet? That is the real question. What is the actual secret to building wealth here? Most people look at a guy like Munger and think, well, obviously I need a mountain of cash to even start investing like that. But is a lack of upfront capital really the thing holding people back?
Here is the absolute truth. The biggest problem isn't your bankroll. It's simply not starting. Munger's strategy works brilliantly even with tiny amounts of capital because compounding literally does not care how you begin. It doesn't care if you start with $10 or $10,000. It only cares about how long you stay in the game. Time in the market matters so much more than what you start with.
You absolutely do not need a fortune to get off the sidelines. Today, you can use platforms like GoTrade to start with as little as $1 single in under 10 minutes. It gives you fractional access to major US stocks like Apple, Nvidia, and Tesla. The specific app you use matters way less than the simple act of starting. The whole point is to begin small, stay ruthlessly consistent, and think in decades, capturing that exact Munger mindset. Listen, Charlie Munger didn't get to $3 billion by being busy. He got there by being fiercely, stubbornly patient. Wealth isn't generated by frantic daily trading. It's built on a handful of correct decisions that you hold on to for decades. We've just seen the proof across these 8 forever stocks. So the only question left for you is, are you going to keep waiting for that imaginary perfect moment, or are you ready to make your first forever decision today?